This is a paid advertisement on behalf of Granada Gold Mine. What's going on, guys? This is Aaron from Departures Capital, and we're here with Frank Bassa, President and CEO of Granada Gold Mine. Pleasure to have you back on today, Frank. How you doing?
We're good. Thanks a lot for having me again. Always a pleasure.
Yes, excited to be talking about this new project. So, Frank, you've been with Granada Gold Mines for over 2 decades and bring 28 plus years of global mining experience as a professional hydrometallurgical engineer. Can you walk us through your journey with the company, how you first got involved, the vision you had back then, and how that vision has evolved to where Granada stands today?
Well, I am what I call a block investor. I buy lots of shares. And we bought into a company called Casal Big Valley, which was actually what we call a successful failure. It got delisted, it was in debt, and some shareholders and brokers called me from Ottawa and said, "Listen, Frank, can you help us?" I said, "Sure. What do you want?" So we found a property, a former producer on a Cadillac break in Quebec. We put it into this shell, which was, let's call it challenge. And within 18 months, we're trading 120 million market cap. So it's a good property. Foreign producer, was high grade underground, 9 to 10 grams a ton, and was very little developed. It had two shafts. They only took out about 52,000, 55,000 ounces of gold. It went through a lot of colorful hands. We got our hands on it, and then we said, let's change the model. So what we did was developed it as a large open pit. So, as we go through our conversation here, you'll notice we did a lot of shallow near surface drilling. We got a lot of high grade and low grade numbers, but we would get lengths between 100 to 200 meters from surface in the 1.5, 2 gram range. And then we also got some very, very, very high grade numbers also from surface. The reason we're getting this, we have what we call a nugget effect. There's a lot of native gold. 50% of the deposit is native gold. We also produce some very conservative resource numbers. We did two types of open pits. We did one at 1 gram, which gave us all three categories, about 2.3 million ounces. And then we did an open pit at 2 grams, who gave us about 1 million ounces in all categories. So we can look at it now. Maybe we should look at working at the 1 gram material and keep on going. We're only 20% explored. And our next program was to do the deep drilling. They see the extension of this potential this deposit. If you look at some of our sections on our PowerPoint, you'll notice we did most of our drilling, which is about 120,000 meters near surface, all shallow.
Granada's flagship project sits on a historic past-producing property in Quebec's Cadillac Trend, and the team has secured key permits and advanced exploration. Can you break down for our audience where Granada currently sits on the path to becoming a near-term producer, and what milestones investors should be watching out for in the next 12 to 24 months?
So what we did was about 10 years ago, we tried to do what we call a very large bulk sample. We called that a rolling start. It was about 600,000 tons of material over 3 years. So we did have an agreement with IAMGOLD to mill a rock. IAMGOLD got into what I call a financial distress. They're trying to get a project going in Ontario. There are challenges getting their permits. They're doing quite well now, but we were supposed to ship our rock to them for 3 years. Got our permits, so we're basically shovel ready. So the original design was take a very large bulk sample to confirm the grades. So if you notice, even our high grade open pit, which at 2 grams, historically was operated at 3.5 to 5 grams a ton. But we use SGS, which are very conservative, and they came back at 2 grams. And we kind of indicated to them it's a little more conservative than we expected. We did a couple of 500-ton bulk samples, and both came in the 4 gram range. So at the 2 gram open pit, it might be even higher. But to confirm that, we wanted to do the 600,000 tons of material, custom mill it, and then we kind of correlate the drill data to the mill data, said, look, possibly a much bigger resource. It's the same thing with our 1 gram open pit at 2.3 million. It might be higher than 2.3 million ounces.
So you've talked about Granada being one of the few fully permitted projects on the Cadillac Break and the potential for feed to nearby mills. What makes Granada uniquely positioned compared to other junior gold developers, and how does that influence your strategy for production or potential partnerships?
Well, the thing is, we were always designed to be somebody takes us over and we walk away. We were hoping that was going to happen. At this cycle, it might happen. We're one of the few deposits on the Catalan break that has permits. Permits are not easy to get, and most people are aware. It took us 2 years to get our permits 10 years ago. It cost us 6.4 million to get our permits, so a lot of studies. So a lot of juniors never get their permits, but our intent was we have to assess the ore body. We want a custom mill. But now with the price of gold going where it is, the potential exists. If we did a feasibility study, you can justify a mill. So we might have more than 2, 3 million ounces. We might be looking at, we're only 20% explored. So carry on with the program. With the high price of gold, you can justify building a mill on the property to process your rock now.
Very exciting times for the gold market. So I always love to talk gold prices. So gold prices and market sentiment are always top of mind for
Yeah.
investors. From your perspective as a mining CEO, how do you view the current environment in the gold market, both near term and into 2026? And how does that shape Granada's plans and priorities going forward?
Yeah, I think what we can see here, Aaron, is I think we might be going to some very exciting times. There's a lot of uncertainty globally. I never thought I would see price of gold this high this quick.
Mm.
It's very positive. And normally price of gold goes up. It has a tendency of kind of retreating a little bit. I have people calling me saying, oh yeah, we're going to see $12,000 an ounce gold. And, if somebody told me that years ago, I would have said, no way. And if somebody told me it was $4,000 an ounce, I would also say, no way. Like when we did our studies, gold was only $1,400
Mm.
an ounce. That's not that far away. And you look at it now, I think today was $4,600 an ounce. And I don't see it stopping. There's a lot of uncertainty globally. So it could probably go to 12,000, but even at 4,600, it changes our ore body significantly. When we did our resource, we took a very high cutoff. So if we lower our cutoff with our 1 gram open pit, we might exceed the 3 million ounces now without doing any drilling.
It's amazing how fast things change, right? So looking toward 2026, what are the key catalysts, whether drilling results, resource updates, development milestones, or commercial partnerships that you believe will define the next phase of value creation for Granada Gold Mines?
So what we're going to do, we're going to do probably do one of our resources with a lower cutoff and see how many ounces we get. So that's low cost, but we're going to drill. We're definitely going to drill. We're only 20% explored. We have another 80% to explore. We did and do some deep drilling, so it confirmed there's an extension to the ore body, and hopefully we can hit, at least 3 million or probably up to 5 million ounces. But a drill program, it'll run for a few years, but it's quite a large ore body.
Probably the most exciting time to be drilling, and hopefully you're rewarded for that with some great results. But thank you for introducing this story, Frank, and I look forward to covering it. We'll definitely have you back on as things progress.
Well, thank you very much, Aaron.